Hey, if one of your tenants slips on property number 2, will properties 1 and 3 be at risk? Not if you stack your entities the right way. Hey, in this video, I'm going to show you what I do for my advanced investors to make sure that they're protecting their assets using a 2-entity stack. All right, let's get started. What am I referring to here when it comes to protecting these assets? Well, here's the thing. A lot of real estate investors keep falling into this trap of putting several properties inside of one limited liability company. And they think, hey, I'm protecting myself. I was recently at an event in Vegas where I was teaching these types of strategies to over 300 investors. And during that conference, I asked someone, how many properties do you have in your limited liability company? And they told me, this individual said, I have 4. Now my question was, why do you have 4 properties in one LLC? Now, of course, the answer is going to be asset protection. Well, what are we really protecting against? Because when you're setting up one LLC and you're putting 4 properties into that one limited liability company, if something goes wrong with one of those properties, then all of the properties are at risk. More importantly, by putting 4 properties into one LLC, you're actually encouraging lawsuits in a sense. That is, if an attorney were to take on that tenant and they see that that LLC has 4 properties, well, they're going to become much more aggressive in their pursuit of a recovery for their client, of course, because they believe that you have the funds to pay. Now, for our advanced investors, what do we do here at Anderson to help them protect themselves from this type of risk? Well, we call it our 2-entity stack. So here's how we're going to set this up. What we're going to do is we're first going to start with a limited liability company down here, and this is going to be a Wyoming LLC. Now, this LLC is either going to be owned by you, or if you've set up a living trust, which we highly recommend you do for estate planning purposes, that will be the owner of this LLC. So initially, I'm just going to put you, maybe you're married, you and your spouse, as the members of this company. Now, this company itself, you're going to need to put a bank account inside of here, so make sure you get a bank account set up. But this is your first entity, and the reason why this is the critical piece to this 2-entity stack strategy is that this entity right here is going to do 2 important things for your overall planning. Number 1, it will provide you asset protection, okay? What that means when I say asset protection is that if you're involved in a lawsuit personally and somebody's coming after you, they will not be able to take this LLC from you. Now, that's a far cry from if you had a property LLC currently. Maybe you're an investor in California, Oregon, Washington, Texas, some other state, whatever it is. That LLC could be exposed to your personal creditors. So you set up the LLC and you think, all right, I have this limited liability company here, and inside of the LLC, I have this property. If something goes wrong, I'm down here as the owner, I'm protected. You're right, you are. But what you're not thinking about is what happens if you get sued personally because you're the one that clipped someone when you're driving down the street because they stepped out in front of you because they were drunk, but it doesn't matter. They're going to sue you. And then the question then becomes, can they take that LLC from you? And if they can, because your state allows it, then you lose your property. You see, that's the liability or asset protection that I'm referring to when I'm talking about this Wyoming LLC. Okay, so that's number 1. The second benefit of using this structure is privacy. And what I'm getting at there is that when you set up a Wyoming LLC, this is where it really shines for us as investors or people who have assets, and I don't want people up in my business. I don't want them to know that I have these assets. So in Wyoming, they do not collect any information on these people right here, the members of the LLC or the managers of the LLC. That information, they don't even ask for it. So what does that mean? Your Wyoming LLC does not have your personal information attached to it, so you are hidden from public view. Awesome, great. People don't need to be up in my business. My business is my business. Now, so this is entity stack, the first piece of this. Now, the second piece of this is where sometimes people get confused. You need to set up a LLC in the state where the rental property is located. Now, let's assume that I hold property in Oklahoma. Then this will become an Oklahoma limited liability company. Now, what's critical here is that when you establish this LLC, the reason why I said it was the second LLC, it's because this entity here, the Wyoming one, will be listed with the Secretary of State of Oklahoma as the member manager of this company here. So you have to list that as the member manager. That's critical to make this 2-entity stack strategy work for you. because you want to show the Wyoming LLC, let's just call this one No One. That's the name of it, No One LLC. No One as LLC is the member manager of my Oklahoma limited liability company. Hey, this is a simple step here, but it's a critical step. It's one that you do not want to miss, because if you're missing out on this, then you have no privacy, okay, with your structuring. If anybody looks at the property held by that LLC, it's going to trace right back to you. But by using this Wyoming blocker in this stack, you're keeping that at a distance. So if somebody looks at the Oklahoma company, they're going to see No One LLC, and they're not going to see you. Okay, so now when you set up your Oklahoma LLC, let's put a bank account right there as well. So when this is set up, the Oklahoma LLC will own the property. All right, so that's protecting LLC number one. Now, what are we going to do with those other properties that you own? Well, it's the same process. It's repeatable over and over again. So for the next property that we have, we will create a second LLC and then a third LLC and so forth. And you'll keep building this out, creating more limited liability companies as you acquire more investment real estate. And so we put that property into there, this property go into here, and then each of these companies are all held by that same Wyoming limited liability company. And again, we're putting these bank accounts inside of the LLC. Now, why am I keep talking about the bank accounts as I'm describing this two-entity stack structure for you? Because some of the confusion comes in is, where do I collect the rents? Right? So when you're collecting rents from your tenants, you'll have them pay the LLC that holds title to the property. Generally speaking, that's where that money flow is going to go. They're not going to be paying this entity down here. If you have a structure that looks like this, and you're having your tenants pay this holding company down here, then you're doing it wrong. And you're exposing this company right here to the claims that could be brought against one of these property holding LLCs. Meaning they could say the manager, which is the Wyoming LLC, was negligent in the way in which it was making sure the property was safe for the guests that came on there. So you want to keep that completely separate. Have the rents paid to the specific property LLC. Now, if you're using a property management entity, well, that'd be different. If you want to set up a property management entity, you can do that up top, and then that could serve as your property manager, and you can collect all the rents there. Okay, so one thing that comes up off of this when we start talking about this multi-entity stack many times, and it may be a question in your mind right now, is how does the money work? That is, how does the money come back to me if it's being collected in these limited liability companies? Now, I have other videos on my channel discussing this, but you know what? This is a great time just to hit it as a refresher for many of you. So the way the money works is that when you collect the rents here, the money will initially go into this LLC. Then what you're going to do is you're going to distribute it down to your Wyoming LLC. So that's called a distribution. So ideally, we want to pool our cash down here from our rental properties. And so the Wyoming LLC will hold on to this cash, and then as you need it, you'll take out a distribution to yourself. So distributions flow down. Contributions mean if I put money in, I'm moving the money up or into this overall structure. Now these distributions, a great question that just came up at the event that I was speaking at. Somebody said to me, well, aren't those taxable? The answer is no, they're not. That is a common misconception that investors have when they're using this type of entity stack. They believe that the money they're flowing from this entity to this entity and this entity to me individually is a taxable event. Listen, don't worry about taxes. Taxes are something that get addressed at the end of the year when we determine if your properties are profitable or not. Hopefully they're not profitable because you're using some of the strategies we use here at Anderson to reduce your taxes down, such as cost segregation, bonus depreciation, management fees, to get the income off of you individually. So it looks like your properties are losing money from a tax standpoint, but they're generating great cash flow for you individually. So from tax standpoint, that's the way it's going to work. But what's critical here is understanding that by creating this multi-entity stack, going back to my first point when we started this video, if something were to happen with this property right here, now the only thing you risk losing is that one property. If the creditor, the attorney, they're unwilling to take your policy limits on that property and they go after the asset itself, well, that's all they can get. Everything else that's on this diagram remains protected. So as you see there, everything I circled, it would be protected from that lawsuit. That's why this two-entity stack, I think, is so important when it comes to planning for your real estate investments, and you've already set up some structures here, you can still fix it. This type of planning we do all the time here at Anderson. I suggest that you reach out to us and set up a strategy session. And hey, if you want a checklist on everything that I just went through so you can use it in your own planning, go into the show notes, by the link where you can set up a strategy session. I also have a link for you to download a checklist of the items that I covered in this video. Listen, I wish you all the best with your real estate investing. If you're not yet a subscriber, make sure you do that before you jump off this video. Take care.